Hello and welcome back to Explain the Charts. Today we're tackling the QQQ. Recent news has been dominated by tariff discussions, with the potential for increased tariffs on certain goods. These discussions can create volatility in the stock market, particularly in tech-heavy indexes like the Nasdaq QQQ. Let's start by looking at the daily chart to establish the broader trend. On the daily chart, we see that QQQ has been exhibiting a slight upward trend over the last few weeks. This upward trend is supported by consistently higher highs and higher lows. This suggests that the overall sentiment among traders is bullish. However, there are signs of recent consolidation as the price has moved sideways within a range, suggesting that traders may be hesitant before making bigger bets. Let's now zoom in on the 1-hour chart to see if we can identify any shorter-term trends or reversals. The hourly chart reveals some price fluctuations throughout the day. The 1-hour time frame confirms the range-bound nature of the recent price action. We observe a series of higher highs and lower lows on the hourly chart, suggesting a potential short-term bearish trend. However, we see a few hours of consolidation as prices move in a tighter range, signaling possible indecision among traders before a definitive break. Let's look at the 15-minute chart to understand the very short-term trading possibilities. The 15-minute chart reveals the most recent price action. This granular view gives us a picture of how the price is moving within the broader trend. The 15-minute candlesticks show a high degree of volatility in the very short term, which can be useful in identifying short-term trading opportunities. This time frame also corroborates the presence of support and resistance levels observed on the daily and hourly charts. Based on our analysis across all three timeframes, we can observe key support levels around 510 and 505, with resistance levels near 525 and 535. A break above 535 could signal a strong bullish continuation in the short term, while a drop below 505 might indicate a shift to a bearish trend. A decisive move above 525 could lead to further upward pressure, potentially reaching 540. However, falling below 510 might trigger a bigger decline to 490. The likelihood of these predictions depends heavily on the overall market sentiment and any significant news events affecting the tech sector. Positive economic data and further easing of trade tensions could reinforce the bullish scenario, while negative economic reports or renewed tariff concerns might increase the chances of a bearish trend. Keep an eye on any unusual volume spikes and candlestick patterns such as hammer or engulfing patterns, which could provide confirmation of potential reversals. Let's wrap up with a reminder to stay informed and trade carefully.